Hi, this is Bruce Lemieux with the Lemieux team. How is the real estate market in Montgomery County, Maryland? That's a question we get just about every day from buyers and sellers, and it's tough to figure out, especially when one news report will say the market's going up and the other one will say it's in free for all. So in this video, we'll go through all the metrics so you can have a better understanding of the state of our current real estate market.
Okay, the first metric we'll take a look at is the number of homes sold. Before we look at that metric, let's understand the data a little bit better. You're going to see everything broken down by price range. Our real estate market is different based on your price range, so you'll see that breakdown. And also, all of the data you'll see is for homes that sold from January 1st to August 31st. Okay, during that time period, over 6,600 homes sold, and you'll see the breakdown by price range here. This year, nearly 7,300 homes sold in that same time period. So comparing the 2 years, we'll see an increase in the number of sales in all price ranges. However, at the very bottom end of the market, there was an awful lot of sales, which was mainly attributed to bank-owned properties. And then if we look at the very high end of the market, we'll see the over $1 million range had over 9% increase. However, 800 to 900, 900 to a million, 29 and 26% respectively. And again, this would be homes that last year would have been priced over $1 million that have been priced lower in this market. Okay, another view is to take a look at the same information but add up the asking price for each of these price ranges, and that's what you see here. So the bell curve looks the same, except when you get at the over $1 million mark, you'll see that the actual sales volume is much higher for that price segment. That was 2009, and here's 2010. We'll see increases in volume in all segments except for the over $1 million mark. Here's a comparison of the two. Okay, the sum of the asking price for the homes over $1 million is really revealing. That was flat this year compared to last, but if you recall, the actual sales volume was up 9% during that same period of time, telling us that home prices definitely came down in the over $1 million mark. Okay, let's take a look at how sellers did last year relative to their asking price. The average reduction, which would be the reduction from sales price plus any credits the seller gave from buyer, was just under 5% in 2009. That number went down up till we get to the $800,000 to $9,000 price range. Then over $900,000, we see that the reductions required for sellers to actually move their property was much higher. Okay, if we look at this year, we'll see the general pattern of price reduction by price range was pretty similar. However, the overall reduction was much lower at about 3.4%. Again, at the over $1 million mark was the highest at 5.7%. Okay, the last metric we'll take a look at is the average days to sell. In 2009, it took an average of 99 days to sell. What's really interesting about this chart is the least expensive and the most expensive homes took the most time to sell, and really that's attributed to what I've seen on the low end to its condition. You've seen a lot of the bank-owned foreclosures that are in horrible condition that have taken a lot longer to sell, and then at the very high end of the market, that's really just due to a high level of inventory and affordability. Now if we take a look at 2010, we see exactly the same pattern. However, it took a lot fewer days to sell, 62 days on average, with the strongest part of the market being the mid-range, probably from about $400,000 to $700,000.
So how is our current real estate market? Well, the data tells me that the market's looking pretty good, and here's why.
10% more homes sold this year, and the volume of the asking price was 7% higher. And this year it's taken less time to sell, and sellers are being more realistic on pricing.
Okay, that's a view looking backwards. What about the future of our real estate market? There's three main metrics that I'm going to watch that I think will tell us how our market will do in the months ahead, and here's what they are.
The single most important metric to watch in any market is jobs. In May of 2009, I took a snapshot of the 15 largest metro areas, and Washington, D.C. had the lowest unemployment of all 15. Now if we take a look at July of 2010, we'll see that the unemployment rate is held steady and is still the lowest of the largest metro areas. The next indicator to watch is housing inventory. Higher inventory means a softer market. In 2009, we saw inventory go down progressively every single month. And I think in December of 2009 was probably the lowest it's been in our area in quite a few years. In 2010, we saw starting in March, inventory go back up, and as of now, it is higher than it was this time last year. And the other part of inventory to keep an eye on is the level of distress inventory, which is the number of short sales and bank-owned properties. This continues to be a big part of our market and has inched up throughout the year. And the last metric is interest rates. Just when you think they can't get any lower, that's exactly what they do. Right now they are at a historical low, and as interest rates stay low in the future, that makes housing much more affordable in our area. Okay, so for what it's worth, here's how I see our market in the coming months. I do see a continued sustained recovery. Employment is steady. Our interest rates are still very low. We've got to keep an eye on the inventory. I guess a question mark is, are we getting back to normal, whatever that is, or are we seeing a new wave of inventory which will continue to push prices down? I don't think so. I believe we are again getting back to normal. I mean, there are market headwinds. There's a lot of market volatility in the stock market, a lot of negative media reports, and they're going to challenge buyer confidence. The buyers I see today, they've been out of the market a while, and as they re-enter it, I see them being very cautious, but also very confident to move forward. So I see a sustained recovery going ahead. So that's how I see it.
Okay, if you have any questions about the real estate market in Montgomery County, you can give Jeanette or me a call at 301-527-9079 or visit our website, MoCoRealEstate.com. Hope this market overview was useful, and thanks for watching.